Welcome back to the channel. My name's Christy. This is Jay, and we're going to talk to you guys about something new that's been going on. So, talk to us, Jay. What's new here at TTF?
Well, first off, 2025 has been a very strange year. We've been very quiet on the back end and working on a lot of things, and we're very happy to be slowly tripping them out to the public. But as far as trading in 2025, it has been crazy. Tariffs flying here and there, interest rates, are we going to cut or we're not going to cut? It has been very annoying, and we get it. But what if we may have a solution for you that we've been building in the back end, whether it's doomsday prepping or the markets are going euphoric, you can maybe find some potential gain within each month. And that is earn as you learn.
Yes. This is a new program we have launched here at TTF. If you follow already, you may have already seen the video about this, but we wanted to talk about it as well. But spin it a bit. The Earn As You Learn is a new program that we launched at TTF. It was highly suggested by the members out of their own frustrations with the market conditions. And we said, we'll look into it. We're going to try and figure it out. And I think we cracked it, Jay. I think so too. Basically, what it is an educational program, so you will still learn, but it is a streamlined program. We have streamlined the educational part of it in order to be able to learn the bare necessities and need to get into the program and get access to the systems that are going to be calling out trade ideas to you. Those trade ideas have been performing really well for us. We've been testing this for a very long time now. We've had live testers testing it for a few months. We have people in the community who have already had access to it for the past few weeks and have been using it, and it's going really well so far. Essentially, what we were looking for when creating it was to earn about 2 to 4% on an account in a month. That was kind of what we wanted and shooting for. We are seeing that consistently happening. Sometimes it's even more and with minimal drawdown. A lot of you had expressed your frustration and not wanting to be these super uber rich gurus and trying to make these ridiculous gains, but you wanted the consistency. And you said if you could just make like a consistent 2 to 4% a month and start to grow your accounts, that you would feel very satisfied with that. We heard you. We have worked on this, and that's what we are offering now with this system. So you will still be learning as you're earning, but that is the idea is that you can now take some of that pressure off of yourself. Are now going to be consistently being able to earn and grow your accounts while you're still mastering the skill and be learning how to do it on your own without the trade idea. But in the meantime, you are having the trade ideas given to you through our systems that we offer, and it is good for all levels. Honestly, we're all using it too, and the staff are using it. And we're going to talk to you about some different ways that we are approaching it. For the day traders who trade like a scalping style or you're more intermediate day trading, you are good. We have system one and system two for you. You can see that if you're in the community. You'll also see those numbers in this video as well. But we wanted to approach this from a different point of view for investing. And that's how we are looking at it because it's something that in these times, I think that people sometimes stray away from when you really should be getting into it more and understanding it better. And it can actually help you grow your own personal accounts so much faster. So, we're going to show you guys some numbers and some ideas on how you can even take something like Earn as You Learn and spin that into investments and how the gains would look on your accounts. You'll get to kind of see both perspectives, but that is the idea of our Earn As You Learn program. We are attacking it from every way we can think of for day traders, for intermediate traders, for investing style. We are working on prop firms. That's a spoiler alert. Jay will talk to you about that. We have officially started our first prop firm, placed our first few trades with it. We are up on the account, so we are working on that as well. We're trying to really expand this program out to cover everybody's goals and make it very versatile. But let's look at it from an investment point of view because personally, I am really liking this and I am running this. So, Jay, let's blow their minds with how this looks.
And the last thing that I want to cover too is we want to actually show you what consistent trading looks like. It is not flashy. It is not everything that you see on YouTube. You're not making thousands of percents a month. It is just simply 2 to 4% monthly, which turns into 24, 40, 50% annually. That's what the big boy hedge fund people are doing. Prop firms have made it very unrealistic of having to make 8 to 10% within a month. So we want to show you the art of compounding.
Yes. And this is with safe risk, realistic expectations, and $1,000 or less on an account. So you really tried to bring that down. And we are currently still working on like getting as low as possible on the like capital that you could safely use in this. So yeah, we're going to show you some compounding. Personally, I also am starting with $1,000 account on one of my accounts too, because I really am interested in seeing it grow. I think this is awesome what we have seen from an investment point of view and the potential of it.
Okay, so from an investing and trading standpoint, you're always going to wonder what the risk reward ratio is. You want to know how much you gain and how much you have to endure, at least equity drawdown wise. When you're usually investing, you're usually buying, holding. Or as far as trading wise, whenever you have losing streaks, like how many losses could I see in a row? You want to manage that risk. Like Chrissy was saying, we wanted to show you investing comparative to what our systems are showing. And you'll see here in the second column, the estimated annual and monthly gains of general investments plus our systems. So investing, you're buying and holding. How much drawdown could you see to the gain? Obviously, we're not going to time the complete bottoms to get the most gain. Sometimes we might even time the tops to get less gain, but on average, annually, you can see the S&P making 7%. I think Bitcoin 30% annually is a little low, but maybe they're factoring in future performance, but maybe 40 to 50% for Bitcoin. But either way, we'll go with 30 because that's what Grok told me, and Grok knows best.
But disclaimer on the Bitcoin, you also could make nothing in that year depending on where you're at, and no, it'll fly. So Bitcoin is definitely on the riskier side of the investments. I love Bitcoin, huge Bitcoin investor as well. Just making a note that one's a riskier one.
You can see in that third column, like the average max draw now is 60%. So have fun.
So
Have fun on that roller coaster.
if you're looking at these for other potential investment ideas, which go for it, just side note on the Bitcoin, just be careful of that roller coaster ride, like Jay said, because you will definitely have ups and downs, very steep ones.
And then the more boring things, you have gold, which actually gold hasn't been as boring anymore since all of this Mayday doomsday drama that's
Yeah.
been happening over the past year. 6% annually, it's probably going to be a little bit higher just because of this year and the previous year, 2023. But still, you could see a max drawdown average around 12%. And then 401k retirements, Roth IRAs, whatever you want to call it, 5% annually, I think kind of is a stretch. Usually it's around 3 to 5. You can see a max drawdown 10% in there. But what I want to focus on is this last column, which is your risk to reward. So, are you gaining divided by to what do you have to endure and hold through drawdown wise? And you could see a very interesting trend that all traditional assets investing wise is a 0.5 risk to reward ratio. That means you have to hold 2 times more drawdown than the gain that you actually will see on average annually. But system 1 and 2, from a monthly perspective, now, this is last month's numbers, May 15th through June 15th. It was kind of crazy. I'm not going to lie. It was a little bit above average. So 5.4% monthly, not annually, monthly for system 1. And then system 2 was 10.8%, which was huge. And the max drawdown for system 1, 2%. The max drawdown for system 2, 7%. You can see the risk reward ratio on the side now. System 1 is 2.7 and system 2 is 1.54. Anything above 1 is amazing. Like 0.5 isn't bad because this is your staple investments. But our systems right now are performing a lot better. But you might say, Jay, well, this was above average month. What can we see on average? Well, bam, right at you. System 1 is 4% monthly still. And then system 2 is at 7%. You could still see a 2 risk reward ratio for system 1, and it's still around a 1 risk reward for system 2. It's still a lot better. Even if system 1 would only have 2% monthly, that is still a 1 ratio, and it's a lot better than these. And we're still talking monthly. 2% monthly would still be 24% annually. So you're on the likes of Bitcoin with a better risk reward ratio there.
Yeah. And then to be clear, we're not saying don't do these other things. We're just saying in conjunction with them, we're just trying to show you the investment side of this and how that could work. Also noting that, as I stated earlier, the 2 to 4% goal monthly is what we were looking for. And obviously, this past year, the annual is looking much higher than that on average. Could be one of those years that's just a little higher than what we've been getting and what our goal was, which is great. Of course, we were happy to shoot higher than our goal. But what I would like to note about it is that through all the volatility that we've had with this market right now, the fact that it's overperforming and not underperforming
Yeah.
is huge. That's such a reassurance for us because we know it does well in a boring market, nice, quiet, stable one. But to see that it's still holding very true and not crazy drawdown, as you can see the numbers that he was showing here, that's such a huge thing to find consistency in the markets, whether they're quiet or whether they're super volatile. And that's why when we were looking at the numbers and the data and we were nerding out with all of this, we said, wow, an investment opportunity is here because of this consistency. Not just, hey, are we going to get like a really great month and then you try to make up for the other months that might be a little rougher. This is consistently performing and overperforming now. And some people do really well in these very volatile markets and doomsday type of markets. But for most people learning, it can be very frustrating to come into a market and trying to learn in the type of environment. To be able to have a whole entire system 1 and 2 and just trade ideas just given to you
Mhm.
while you're learning and like earning this type of percentage, my goodness. Let's play some what if numbers with them. Because what we see a lot is a lot of people like doing these prop firms. We love prop firms, love them still. But lots of people are doing them. They are not able to pass them. They're just kind of throwing money at them and then they're getting frustrated. And we do see this over and over a lot. And a lot of people tend to start leaving the day trading space and going more into a potential investment space because they said, hey, all this money that I'm throwing at these prop firms, had I just thrown them in an account, a high interest yield account, at least I would have made maybe 3% annually, right? Forget your prop firm right now. Maybe you're not ready for that. You can earn something in an account, treat it almost like a high interest yield account. Stop throwing money at these prop firms right now until you're ready. Let's see what it would look like if you were throwing it into this account and then following a system. Let's play the what if game.
What if you would only put $1,000 into either the investments that we just gone over or any of our systems? And now we're going to start with really good months. For instance, the 5.4% monthly in system one now turns into 64% annually, and the 10.8% monthly in system two turns into 130%. So we're like doubling and a little bit of change every single year. You dump the money into here, have your S&P Bitcoin Gold retirement. Here's all your annuals. And after the first year, you start accruing some decent gains. Come all the way to year five, and still, it's not bad. You made probably around 40% in the S&P, which in a 5-year stint is 8%. So basically toe to toe with inflation at that point. Bitcoin's a little bit better, but the system one and two, if this stays consistent, now again, this could be a little bit above average for this month, but let's just play the hypotheticals. You are going absolutely crazy. You could have potentially made an 11x in system one in 5 years, and then in system two, a 64x. How would you like $1,000 to turn 64,000 now? But some people are like, well, I don't want that in 5 years. Well, let me break it down to you. Trading is not instant, it's not get rich quick. You have to build that confidence in yourself. You could be in your year two, in your year three, still spamming prop accounts while you could have been doing earn as you learn system one or two, either two to 4xing your money around that time, building your confidence. And then now you could use profit to fund those prop firms that you're trying to pass instead of going through your bank account.
I personally was somebody who did this and didn't do the prop firm routes. They weren't really available at the time that I was learning to trade the way that they are now for people. And I highly agree with Jim. I cannot stand strong enough and back what he's saying enough where psychologically, I can't imagine having the pressure of having a 100K account just given to me and seeing those numbers. I grew it smaller. So my mind and systems were able to adapt over the time as the accounts grew and the capital grew. And it became very natural and felt easier for me. You're not looking at it as a 5-year plan and you're like, "Oh, I'm stuck with only this for 5 years." No, you're still learning to day trade. You can day trade alongside with these accounts, and then these accounts become your investment style type of accounts. This is all for investment. These are your long-term plans where you're just getting a significant percentage back on your annual return versus like simples and P500 or something like that. Side note though, we still love all of these other things as investment options too. So if you're not interested in system one or system two and you're just like watching because you're interested in learning about a little more investment, here's some really good ideas. These are some of the big boys that people get involved in. And if you just want to dip your toe into the investment world, check some of those guys out. Maybe not Bitcoin, but check out the other ones. Those are all some like nice ways to start getting a little bit more involved in investments and just starting to make some sort of return. Also, one more side note here. Obviously, some of these are like set it and forget it. You throw your money in and you don't do anything and it just does this on its own. System 1 and System 2, you do have to actually pay attention and take the trades. You have to place them, but they're not that they're not flying at you. There's a few coming in a week, maybe for System 2, maybe 1 or 2 in System 1 in a week. Like, don't have to take every single one. This is something you can do and still make a pretty significant return in comparison to the other ones. We are loving this. I mean, these numbers are great. Let's look at the 100 plus monthly. I'm excited to do this and I'm going to share it. I'll totally let you guys watch it throughout the year. This is my plan to just contribute 100 monthly and see how this turns out for us.
I wanted to do another scenario because it gets a little more fun, especially when you start dollar cost averaging monthly into this, almost treating like the S&P or Bitcoin or gold, where you just chip in a little bit monthly. Who cares the numbers? That is all personal preference to you. But most people lack that perspective, especially in a personal account. They just assume you put the initial investment in and then you just trade. You can compound, but what if you consistently add month over month to where it's almost like a high interest savings account? And me and Chrissy love those. We have plenty of them. 100% monthly and the $1,000 initial investment. You're contributing 1,200 a year on top of that $1,000 investment. Now, Bitcoin is looking pretty good after 5 years. Again, it's 5 years. It takes a little while, sure, but that is you just buying it on average. Maybe it's a little bit above or a little bit below, depending on whenever your timing in the market. But System 1 and 2 on its above average months kind of go crazy. And if this is anything close to average in 5 years, having 900,000, now you need to understand since your dollar cost averaging, you have to add this in every single year. So, example for System 1, you are at 3488, but that is often $1,000 investment plus $1,200, 12 times 100. That's what you invested. So it's 2,200 that turns into 3488. And then the next year will be $3,400 invested, then 46, then 5,800, and then 7,000. So S&P might look amazing at 8577, but note you put in $7,000 for that 8,500. Now you could look at it from that 5 year perspective and see, okay, we've almost tripled in Bitcoin value. We have 9x System 1, and we've
A lot of X
a
systems.
lot of there's a lot of X's there. It's listed too. It's almost you're almost in the milli club. Now, this isn't guaranteed. This is just hypotheticals. Again, this is above average. So let's tone this out. Be like, all right, Jay, you're like feeding us the road to a milli challenge in 5 years. No. So here is more conservative. So instead of the 64 and 130% System 1 and 2, we have now made this 48 to 84% because 4% is pretty viable for System 1. And then System 2, what we've been seeing is a fluctuating 7%. So sometimes it's 6, sometimes it's 8, but around that 7% monthly gain. So it turns to 84 annually on average. Now, this is again the $1,000 initial investment only. For System 1, it'd be 7,100, and System 2 would be 21,000 compared to the 11 and 64. We lost a little chunk change, but I mean, still, you put in $1,000 and in 5 years, it could turn to 21,000. Again, only the initial investment. Now, going back to our fun little high for saves account plan, where you're putting in that $100 a month, it's still really good money. It's $7,000. You basically 5x your account in 5 years, and then down here you've 20x your account for System 2. Really good numbers. And maybe you get a better job later in the future in a couple of years, and you could put in 200 instead of 100. Maybe you have to start off with $10 a month, and you could slowly build up to 20. When you have something that is slowly accruing month over month and building your confidence that yes, you can do this, you physically see this happening in front of you, once you see that you could do it, like, sky's the limit for you.
But once that pressure to perform is removed, I find that people do so much better. That have to, need to, those words that you put in there, everything is depending on you passing that one prop firm. It were all your eggs are in one basket type of scenario. When that is removed and you know you have something in the background that's running and it is actually making you and you say, "Well, here's my fallback plan. Here's some I know I have this going." You will do so much better with your day trading. I promise you that every time that somebody's struggling and they end up finding some sort of plan B system that run in the background and they start seeing it, it instantly just changes your mental game when it comes to trading. Because that pressure and the need and the desire is relieved. You can breathe now. Now you're making very smart, educated, safe risk type of calculated trades, and that does pay off for you in the long run because you're not so worried. You have something like this, you end up using earn as you learn or not. Either use the S&P 500 or Bitcoin or gold or 401k or whatever your thing is. Even if you just go get a high interest yield account, the idea is you should be looking at some sort of way to help your money and your savings grow. That's the takeaway here for the people in the YouTube world. If you're not in the community and you're just watching this because you are a follower and you want to watch it, take that with you, if nothing else, from this video is that you should definitely be using your savings in some way to help you grow and start building capital off of that you can use in your own day trading, like pulling it from it versus always going out of your pockets all the time. You can also compound it, which as you're seeing here through these numbers, and these are just our numbers, we're just showing you guys as examples. But like Jay said, $10, like I know $100, depending on where you live in the world, may feel like, what? Are they crazy? Whatever you can give is better than nothing. And the way that inflation is going up throughout the entire world right now, like something like this is helpful no matter which asset system or whatever you decide to pick. Like you should be doing something that is helping your money grow as inflation is going up to at least keep up with inflation, if not ideally outpace inflation as far as what it's earning you. And system one and system two are way clearing inflation rates right now. So that's shoot, like
Monthly.
monthly you're clearing it. So I mean that is more than we could ever ask as far as the performance. So we're very happy with the way that Earn as You Learn so far is doing. And we also are keeping up with, like I said, we're looking to expand it out. We have other systems also running right now. We currently have two that are running. One is more ideal for people who are looking for a couple, maybe like 1, 2 trades a week or so, not looking for anything too crazy. That's the system one you're seeing and the returns that you're looking at. Then system two is a little more aggressive for those experienced traders or somebody looking for more opportunities to get into trades throughout the week. It is a slightly higher risk, still very respectable risk to reward, though that's something we were really, really honed in on when we were creating this. And we have both. If you can do both of them are available if you are in the community and you do go through the Earn as You Learn program. Once you get through that program, it's about 2.5 hours or so of content, and we feel comfortable that you have the bare bones knowledge to get started. So if you have no experience with trading, we've created it. You can start. You can start with system one or system two. We feel pretty confident in them and the performance that we feel that we could do that for people. Okay, so Jay, show us the stats because we're super transparent with everything. So let's show a little bit about what you will see when you do come into the programs.
Yeah, so this is an extra video we did just specifically for the community, but like Christy said, we're not showing the this you could have caught this amount of pips. No, we're transparent as hell. So literally system one, option A, just taking all the trades. You can see all the way down here, we got around $48 and after fees was around $46 and about that 5.4% gain that we showed you. It was an $855 account and that's that. For system two, we had option A placed on all the trades. It did have 14% drawdown and 8% gain, but an option that we recommended was skipping the first trade. And if you did that, you made around 10.8% monthly gain that we showed you and only a 7% drawdown. Again, show you all the values and calculate it all. But if you simply just took all the trades, sure, you had minus 14 drawdown, but again, you had around $92 made, about $93, and then after fees it was around $80, and that's where we get this number here. No fluff.
We've seen a lot of people, unfortunately, leave day trading and things like that behind because they just hadn't been able to find something like this that exists. You know, you don't want to be spoon-fed signals necessarily. You want to learn how to do it, but you need some sort of idea of when you will see consistency. When will you see profit? And we get that. It's super hard to do that right now, especially with the economies the way that they are. Giving out any sort of money and getting into a skill set that costs you potentially a lot of money that you can lose. In this time right now, when most people don't have a ton of money to be losing, we get it. There isn't guarantee here from us either, but we can show you what we are making. We are showing you the accounts. So all we can do is tell you that as of right now, all the testing we've done and all the stuff that we have been running is looking really good for at least a consistent 2 to 4%. But honestly, we've been seeing more. And we did show you that. So That is Earnings You Learn. If you gotta see more stuff like that, all those what ifs, like, leave us a comment below. Let us know. I'm happy to do a much longer podcast style video with Jay and just nerd out on Earn as You Learn. Maybe we'll bring on Ken. Ken has actually been doing some stuff with some pretty good stuff. Leverage. He's been leveraging, but you know what? If you get that 500 leverage, you might as well do something with it, right?
We're stress testing everything.
Yes. Anyway, all right. Thank you very much for joining us on this video. If you are interested in joining the trading floor community and the Earn As You Learn program, check us out at the trading floor. It's www.trdfloor.com. I'll leave it in the description box linked below, and we'll see you over there. All right. Bye.
Peace.